Okay, hello, it's Paul Green here from the business community. We're doing another one of our regular Spotlight On features. And this morning we've got James Blacklaws from JB Commercial Finance. Good morning, James.
Morning, Paul.
Welcome aboard. So we're going to give James a little bit of a grilling and find out what makes him tick and how he's come to be the business owner that he is today. So for those people that don't know you, James, which might be quite a few, do you just want to introduce yourself and let everyone that's tuning in know who you are and what you do?
Yeah, thank you, Paul. Hi everyone who's watching. My name is James Blacklaws. I'm a business, as you can see behind me, is JB Commercial Finance. It's a commercial finance brokerage based in Leicester with nationwide coverage, looking after all aspects of business finance and property finance as well. I've been in the industry 18 years now and run my own business at 5.5. And you know, the last year or so has obviously been quite sort of turbulent. A lot of information about the government loan schemes, etc. And I try and keep people as up to date as possible with what's going on the business side of things and the property side of things with regard to ability to raise finance. So that is me in a nutshell, if you like.
Okay, so you said you've been doing this for 18 years. So how did you mean this actual business for 18 years, or you've been in the banking and finance industry for that long?
Yeah. I mean, I began as a corporate bank manager in 2003 for a high street bank, and I was in that industry until 2015. So I was looking after business customers, looking after their relationship requirements, their product needs, their lending requirements. And I decided to become self-employed in 2015 and start my own brokerage. So I've been in the industry, the business, commercial business finance industry, for 18 years, and started myself as an independent whole of market broker for 5.5 years. That's June 2015. I set up my own business.
Okay, so the traditional path that I guess most small businesses use when they're looking for source of funding is the high street banks. I think obviously the benefit of coming to someone like you is you've got a much wider range, I guess, of sources of funding. So do you want to just explain a little bit about, who are those people and where does the money come from and how do you sort of access them? How do people access you to get to those alternative sources of funding, if that makes sense?
Yeah, but a lot of businesses, first of all, go to their own high street bank, as you correctly say, whether they're looking to purchase a property to trade from, whether they need some working capital finance. And the best advice generally is to speak to your own bank, because they'll have a history of your trading. They'll generally have accounts on file, be able to see your account conduct, and they should be able to approve things quickly if needed. What we're increasingly seeing over the last few years is that the high street banks have withdrawn a lot from the SME marketplace. Certainly the smaller levels of businesses, let's say sub 5 million turnover, the relationship manager model has moved upwards. You're now looked after by a call center centrally, and the requirements have become tougher and tougher to fulfill. So the alternative lending marketplace has grown very, very well, whether that's unsecured facilities. People will come across peer-to-peer lenders like the Funding Circle and iWalker and similar to that. And also what we call challenger banks. People may have heard of Shawbrook, Aldermore, Cambridge and Counties, etc. And that's where you can generally help clients who have either been turned down by their banks, or they can't be bothered to actually go through the hassle of finding the finance through the banks. They'd rather have someone do it for them, or the banks simply haven't offered them exactly what they need. So a classic example might be the amount of finance they need. They may have gone to their bank and said, we need, let's just say, 75% of the value of the property as a loan to purchase it. And the bank has come around and said, we'll only give you 60%. Therefore, they've got to look at other requirements. And that's where someone like myself can really come in and add value, because you can give a range of 200 lenders products potentially, as opposed to a client just going to their own high street bank who can only offer their own product range.
Okay, and do you get involved if people are looking for investors in their business, you're the sort of like angel investors and things like that? Is that part of the domain in which you operate as well?
Generally not. It's a tricky part of finance, that, because there's zero regulation effectively with regard to getting involved. And the sort of circumstances generally people get involved as an investor is when the business isn't able to actually raise conventional finance. So if a business can raise let's say £500,000, needs £500,000 for its development, you would generally rather get a loan from a bank or another lending provider at 3, 4, 5% interest rather than give away a part of your business to an investor, unless you actually require their expertise. So it is a part of the marketplace which exists. I know people who deal with business angels, but it's not something I deal with directly, mainly because of the accountability can be very tough, and balancing the relationship between the investor and between the individual can be a little bit of a challenge, and it can get a bit too personal. So it's something I generally steer clear of, to be honest, Paul.
Okay, so if somebody wants your services, then James, then how does it work? You know, how do your fees work? What's it going to cost a business to sort of engage you?
Well, generally speaking, I'll offer an hour, hour and a half, whatever it may be, as an initial consultation, a chat. At the moment, because of the circumstances, quite often that's a 20-minute chat on the phone rather than a face-to-face meeting. But traditionally, it's been a meeting. At that stage, I give a client an indication of what I feel may or may not be available for them based on my experience. And at that stage, I ask them to make a commitment to come and sign up with myself contractually, and obviously give me the ability to use their information legally with lenders. Unfortunately, I do have a family to feed, so I do charge a fee, but nothing's payable, generally speaking, until the loan is drawn down. And that's all about what the customer's requirements are. Occasionally, you'll deal with a very challenging, top-heavy case, which may require an upfront fee because of the sheer amount of paperwork that's involved in it. But more often than not, a fee won't be payable until successful completion of the loan. And that fee can range from anything from half a percentage point of the loan. So if it's £100,000 loan, it may be £500, anything up to a couple of percentage points, depending on the complexity of the loan and the amount of time I'd have to spend on it. But everything's always pre-agreed in advance, and I've never had to deviate from that as yet in my 5.5 years doing this.
Okay, and would it be fair to say that what people are effectively investing in is your experience, knowing how to put forward the proposal in a way that's going to appeal to a certain lender? You sort of know the nuances of that and how to present a business. Would that be fair to say?
Yeah, I mean, I think when you employ a commercial finance broker to work on your behalf, you're getting several things. You're buying your time back, as with most service providers, in that you're not having to ring up 10 different banks to get the best possible deal, because we'll do that for you. You're also getting our expertise in how, as you correctly say, to position a case with a lender. And quite often I'll see a client go to a lender and straight away you'll be able to tell them that lender won't be able to help you. They're not in that marketplace. They don't, you know, they're not in that particular sector at this moment in time. Well, someone like myself will know that, and actually they won't bother positioning the case for them in the first place. So you're buying the time, you're buying the expertise, and you're buying the success rate, because there was some stats, I haven't got them to hand, but some stats published middle of last year, which showed the success rate when a broker is involved in an application for finance to a bank, and is significantly higher than when a client goes directly to the bank themselves. So as with any service industry, you're buying the experience, the expertise, and the ability to actually present a piece of business to a lender.
Okay, now you've been doing a great job since lockdown 1.0. I think we're about to end lockdown 3.0, it seems.
Yeah, I'm not sure anymore.
You've been very good at sort of keeping people up to date. You've been pretty much doing daily video casts on various social media platforms, letting people know what's available to them and stuff like that. Now, the banks have lent out a hell of a lot of money. Presumably their reserves are limited, and they haven't got an unlimited amount of money to lend out in the future. What impact do you think the sort of bounce back loans and C-bill loans and the other variants will have on future lending from the sort of those people that are offering those types of loans at the moment?
Well, this is something that's concerned me since these schemes were announced. The free government loan schemes, as most people will know, the Corona Large Business Loan Scheme, which is applying to larger businesses, clearly, the CBILS loan scheme, and of course the bounce back loan scheme. Between the three of them, I think the figure at the moment is around about £80 billion has been lent under the scheme. About 3/4 of that is the bounce back loan scheme. Mm-hmm. And of that, a vast majority is via the high street banks, the main banks. Yes, there has been some from the challenger banks, but a majority are the main high street clearing banks. And the impact could be very, very extreme over the next 5 years, which is when the majority of these loans will be repaid or not, because it's a massive amount of capital that's been sucked out of them. And there are government guarantees for this, but a government guarantee only kicks in once a business has failed and the bank have gone through their debt recovery process. So that can be several months or even longer. So it's highly likely that banks will have a black hole in their finances, certainly for the first 2-3 years, as the predictions at the moment for the amount of these loans, the bounce back loans especially, which are going to go wrong either via fraud or via businesses' failure, anywhere between 40 and 60%. So you only have to do some crude sums to see there's a tens of billions of pounds of potential bad debt to the banks. And when you look at that against the figures, the profits that business banking generally generates for the high street banks, it's highly likely they'll be in deficit for the next 2-3 years at least. So that is likely to restrict the amount of appetite they have to lend on more conventional lending products to new clients. And that's certainly been my experience so far. Until very recently, a couple of the high street banks were effectively closed for business, and the others were certainly restricted. And I think that's going to continue. So I'm really hoping that the role of the commercial finance broker is actually going to become more important over the next 2-3 years, as we know exactly who's open for business and who's not open for business with regard to lending money.
So will that be an opportunity for you, because you've obviously got different sources of getting businesses financed? So is that going to be an opportunity when the banks are effectively closed for business, that you might have other sources for people?
Yeah, and I'm certainly seeing that now. I mean, because of my relationships with the banks, if they can't do a case, some of the managers there actually refer to me directly because they don't want to turn a client away completely. They'd rather offer them the opportunity to talk to myself. And that's been quite fruitful in many ways for me and for clients in the last 2-3 months, because a client will naturally, as we mentioned earlier, gravitate towards their own high street bank for a deal. The bank turns around and says, no, we can't help you. So what do you do then? You either send them out the door, or the manager might say, well, actually go and talk to James. He's got a whole of market approach to commercial lending. They'll generally talk to someone like myself, and we can find a deal through an alternative lender for them. Maybe not at the high street rates that they were looking to actually achieve, but that offers the client an option, offers them a choice. And that's where I think there will be opportunities for someone like myself, businesses like myself, and opportunities for alternative lenders to actually grow their lending book while the high street banks effectively hibernate until all this blows away.
Now, with some of the loan schemes, I think most of them, there's a 12-month grace period before the loan is payable back, or the payments start kicking in, right. Which will be around about, I guess, I'm just trying to think, it'll be in a couple of months' time, I think, when the first people started taking out some of those loans. And then also people took like VAT holidays and stuff like that. Do you think that'll be another wave of businesses looking to raise some more money because they realize they can't pay back the loans, or they can't pay their VAT bill?
Yeah, I mean, that's been the issue, and I've used the term about kicking the can down the road several times with regard to all the government schemes. And certainly when you're looking at commercial lending, the year's grace of interest and capital, which all the loan schemes offered, was very attractive for clients. It's amazing how the time flies. I mean, the Civils loan scheme was launched in late March last year, and the bounce back loan scheme was May the 4th. So all of a sudden, we're getting perilously close to actually the first repayments on these loans having to be made. And even the bounce back loan scheme, if you took out, as many people did, the full £50,000 over the 5-year period, that works out at over £800 a month. You'll need to find come June, when the first repayments, I believe, will be due. Obviously 12 months from when you took them out. So I believe that at that stage, there'll be a lot of people struggling to make those first repayments. And again, the percentage of clients who won't be able to pay that ranges from anywhere from 10 to 40%, looking at various estimates that have come out from the Treasury and other independent think tanks. But it's a fearsome amount of money. So we've seen a lot already, and I've done several clients who have taken out bounce back loans, realised that's not enough, and now have had to go back for a Civils loan, or they've had to top up their bounce back loan, or whatever it may be. And I think it's highly possible that come the first repayments of the bounce back loan or the Civils loan, either clients will have to come back for more, or unfortunately, they may well at that stage pull the plug, knowing that they're unable to obtain the finance they need, or they simply don't want to take any more debt on.
Mm-hmm. Presumably these businesses that have taken up the opportunities of these, I guess, special loans that have been made available, that still impacts on their credit score, does it? In terms of, where financially they're at for a lender to lend.
Yeah, a lot was made of the fact that the bounce back loan scheme and Sybil's loans under £250,000 weren't requiring personal guarantees for limited companies. But as I said at the time, and I'll say now, that just because there's no personal guarantee doesn't mean there's not personal liability or responsibility for these debts. And certainly credit history forms part of that. So if a soft credit score was done on every single application for any of these facilities, and certainly if you start defaulting on them, i.e. the loans aren't being repaid, ultimately they go wrong, it will have a negative impact clearly on the business, but yourself as a director will have, while you won't have a direct credit rating hit from the loan defaulting, it will certainly show on other checks that you've had a failed business in the background, which left an outstanding liability. So I caution anybody who takes one of these loan schemes out on the basis that there's no personal guarantee, that they don't think of this as a free lunch, because it's certainly not. And I certainly believe that people who take out bounce back loans, and unfortunately there are quite a few who, knowing that they're not going to either pay them back or they're going to struggle to pay them back, they think very hard about their situation, because if they don't pay them back, there will be consequences, albeit they won't have to pay the money directly personally back. It will have consequences on their credit history for years to come.
So, like I say, is this kicking the can down the road aspect, isn't it? I guess that's going to impact small business. I mean, but my feeling is, that there's still a lot of positivity out there inside of small businesses. A lot of businesses have, to use the jargon word, have pivoted their business. They've adapted. They've looked at, what they can do differently given the current climate. People are taking advantage of technology and moving things online where they can. And I personally think that's something that's here to stay and is going to add to reducing costs for businesses. I think more and more businesses now are looking at not necessarily having the need for a premises now, because they realise they can operate remotely. What are your thoughts on the future of the small business world?
I think small business owners are generally, by their nature, very resilient, aren't they? And none of us want to have to go and get a job again, so we tend to use that trendy word, pivot, or adapt to the climate to survive. And for a lot of people, that's meant changing the way they approach their business, cutting their costs accordingly. And for many people, it has involved taking out some finance to continue to survive. I personally feel in the commercial property marketplace, there'll be great opportunities, because I fully agree with you, Paul, that a lot of businesses will look to move away from larger premises with fixed costs. If you had a premises with 20 members of staff and you rent that premises for several £1,000s per month, chances are, when you look at the security, the rates, every other cost involved in that, it's costing you a hell of a lot of money. When actually, if you give all these lads a work phone and a work laptop, they'll probably be able to work from home as they have been for the last few months. So I think there'll be opportunities for smaller business owners to potentially buy property as investment, albeit they may not trade from there every single day. So I do think that the SME marketplace is very resilient. I do think that a majority of businesses will survive. And I do think there is optimism out there. I mean, there's no doubt that a lot of businesses have done well out of the pandemic, strange that it may seem. And I think we just have to adapt to survive, as a lot of us have, and a lot of us will continue to do so. So I believe that if we can get through the next 6-12 months, and the vaccine is rolled out and the world returns to a semblance of normality, then there's every reason to be positive. But it does feel like it's been dragging a long time for a lot of people, and I fully understand that.
Changing topics slightly, you're a bit of a networking tart, I guess it's fair to say. So when you first came out of corporate, did you know about networking? Was that something that you knew you needed to do, or you felt you needed to? How did your networking life start?
Well, like a lot of people, when I started my own business, I had little money and lots of time because I started the service industry and I sat here and waited for the phone to ring. And of course, it doesn't ring because no one knows who you are. And you don't have thousands of pounds to spend on yellow pages adverts or adverts in the local newspaper. So I took the view that the best way of meeting as many people and showing my expertise to as many people as possible was traditional networking. And it's as simple as a Google search initially, and from there you meet people who introduce you to other groups. And I've always had the theory you go along to something, you never know where it's going to lead.
Mhm.
And that's probably how I got involved in BizCom in the first place. I can't remember now; it's been a few years, Paul. But I certainly have cut down on it recently. But I find it an incredibly effective way to meet people and demonstrate your knowledge to them in a controlled environment for a for a nominal fee,
Mhm.
as opposed to sending a blanket flyer out or a newspaper advert, which may reach several thousand people, but how many of them are potential clients for you or introducers for you? Probably not many. So it's something I've always done. It's something I enjoy doing, and it's something I've continued to do during lockdown via Zoom and other platforms which have been provided. It's been successful for me. It's been the way I've grown my business, and it's the way I'll continue to hopefully grow my business going forward.
Yeah, I don't know what you think. I mean, I think now's a great time to network because everything's virtual. You've got no travel costs, you've got no travel time. Pretty much after any virtual call, you're ready to go. So your productivity is likely to be going up, and also the geographic boundaries are removed now. So I'm finding that you're an example of this. You're attending different geographical meetings outside of your Leicestershire home, because you can. In the physical world, you wouldn't travel 2 hours for a 7:30 breakfast meeting, but now all you've got to do is, or we've got to do, just roll out of bed, brush your hair, and we're ready to go, aren't we? Really?
Even that's optional, but
Yeah.
you're absolutely right, and clearly the BizCon meetings are the best example of that. Certainly for me, where previously getting to Northampton or Daventry or Milton Keynes for 7:30 was a bit of a non-starter. And afterwards, obviously, the journey back would take up most of your morning as well. Well,
Mm.
now I believe I've virtually attended all the meetings at least once or twice, and thoroughly enjoyed them. Met a lot of great people online. So I implored anybody at the start of lockdown to get as involved as possible in virtual meetings, because it was clear that there was going to be a period of several months where this was going to be the case, that the only way you could network. And I don't think most of us thought it would go as long as it has, but it looks as though it's here to stay, and you're in a better position than me to sort of give your ideas about the future of these meetings. But I believe an element of networking in this way is here to stay for good, and I personally applaud that, because I think it's a fantastic way of meeting people without having to spend, as you say, an hour and a half on the road,
Mm.
um, to attend a meeting when you don't know how many people are going to be there anyway. So why not do it from your own office, your own premises, your own living room, or frankly, I've seen people do it from their own bed before,
Yeah,
and
I think, I think
that's fine.
I think it's definitely here to stay. Certainly for a few years, I think people will still be engaging in it for the reasons we touched on earlier. So I often ask people on these calls, what's your why? What drives you? What gets you out of bed in the morning? And particularly, I know it's probably been quite difficult for you over the last sort of few months because, like I say, people have just been taking out the government loans and probably haven't needed your services. So that takes quite a bit of determination and positivity to keep you going. So what drives you, James? What's your why?
Well, with regard to sort of tackle that point you mentioned there, I'm happy to help anyone with regard to advice on any of the government loan schemes. And the Sybil's loan scheme, which is the one from £50,000 to 5 million, I can apply on clients' behalf. So I'm more than happy to help with formal applications on that and offer any advice on the bounce back loan scheme, even though I can't formally apply on clients' behalf. But what keeps me going? Well, as I alluded to earlier, like a lot of small business owners, I don't want to have to get a job again. And the world of banking is very tough. Um, it's become increasingly pressurized. Certainly towards the end of my time there, it was, and I doubt whether that's changed a lot in the last 5 years. So I don't want to have weekly appraisals with my boss telling me I've not sold enough credit cards or widgets or whatever it may be. And I don't want a man in a suit telling me what my performance level is or what my working hours should be. So that's been a massive why for me. And it'd be very easy to sit here and say it's all about my family and my kids and stuff. And of course it is. That's why we go to work in the morning. But that would be my why if I was actually attending an employed position as well. But certainly the idea of running my own business and the high I get from running my own business has been massive for me, and I thoroughly enjoy running my own business and feel it's a very privileged position. So to continue to do that is certainly the reason I get out of bed, you know, at whatever time it is every morning, even if all you're doing is offering YouTube advice, you're offering, you know, showing your expertise about earning money. I think giving back is in that way is incredibly important. So that's what gets me out of bed in the morning, Paul.
Okay, excellent. So, totally off track. The boxing gloves, another boxing memorabilia behind you. What's that about?
I've been a boxing fan since I was knee high to a grasshopper. What you can't see is I've got about another 20 odd signed gloves on my wall over here.
Oh wow!
I can give you a quick look.
Oh wow!
Of those. So that's signed by a variety of famous boxers, and what I got behind me is there's various fight worn memorabilia. I mean, that one there was worn by the great Evander Holyfield in the ring, and down there's a piece of behind this actually is a piece of the ring when Mike Tyson fought Lennox Lewis and things like that. So I've always been a massive boxing fan, and now I've got my own office at home. I tend to indulge myself with the odd purchase to take me back to when I was first getting into boxing. So I'm simply an enthusiastic fan, Paul.
So did you actually used to box yourself, or are you more of a ringside person rather than in the ring person?
These days, certainly ringside. It's many years since I got in the boxing ring. Probably, well over 20 years, I would say. And I like to keep it that way. I enjoyed it. I enjoyed the fitness element. I wasn't so keen at getting punched in the face. So they're a rare breed, our boxers, and I quickly found out that while I enjoyed it and while I had a limited amount of success in the ring, I much prefer being the other side.
Yeah, I can imagine. I can imagine. So we've probably touched on it a little bit, but I'll just give the opportunity to expand on it. What would you say makes you different from your competitors? Because there's probably people offering similar sort of things out there to you. Well, why should people come to you, would you say?
I think whenever you're looking for any kind of service professional, and certainly in the finance sector, whether it's an independent financial advisor, a mortgage broker, or somebody who does what I do, there are certain things you should check. You check their experience, how long they've been running their business, the clients they've been dealing with, and their qualifications and their authorizations they hold. And I think that what I offer, which may be different to a lot of current entrants into the marketplace, is being quite strong on those fields. As I mentioned, I've spent virtually my whole working life in this industry, having running my successful business for 5.5 years now, and I try and back that up with social proof. So you mentioned earlier about daily YouTube videos, which I was doing at the start of lockdown. Now I generally do once a week. But my YouTube channel has got over 150 videos on it. My website has got a lot of free blogs on it. And I try and show myself as being different by actually offering to give first. And a lot of brokers will charge an upfront fee to see a client. I've never done that. And I think that anyone who decides they want to utilize the services of a commercial broker, I'd like to think if they search and they found my services that are recommended to me as opposed to someone else, they find someone who's a bit more human than others and someone who can back it up with the social proof of testimonials, case studies, which maybe many others, despite having a slick suit and a nice car, can't actually do. So I think I've got that combination of experience, knowledge, authorization. I always recommend anyone who deals with a commercial finance broker, please make sure they are FCA registered, FCA authorized and registered, and they're a member of one of their trade bodies. Please don't deal with anyone who's not. I'll do the box ticking exercise there. Plus, that combination of experience and approachability, I think, is the reason why people come to myself, and hopefully they find that kind of slightly more relaxed but experienced service is something which is appealing to them.
Absolutely, absolutely. So as we're doing this broadcast, we're as we said earlier, still in this pandemic, still trying to work out what it'll be like to get through it. Outside of that, since you've been in business, what would you say your biggest challenge has been?
Outside the pandemic?
Yeah.
I think with anyone starting a business from scratch with no customers, it is difficult. And I mentioned a minute ago about when you look at the credibility of someone in my industry or in anyone's industry, and you look at how long they've been going and their previous customer history, if you've got nothing because you've just started, it's very difficult to crack that credibility kind of veil. And I felt when leaving the bank, I've been in the bank for 12 years, people want to talk to me because of that. Well, actually, no, breaking down that and starting again from an experienced bank manager with, hopefully reasonable respect in the community and doing lots of business, to being a one-man band and starting again. It took me a long time to get my head around that. So it was I guess it was a bit of an ego check in many ways, in that I felt I'd be able to do it, and I felt I'd be able to walk in and do business on day one, and actually it wasn't. So I think the initial challenge of knocking it all down and starting again now in the long term feels very fulfilling. But a lot of people start a business, and certainly we've had a lot of people in my industry start in the last year or so because they've been made redundant from their finance jobs. And I know a lot of them have already quit and gone back to employment because it's actually very, very difficult to start from the bottom, which I've had to do. So that was a massive challenge for me. And both from a personal point of view, an ego point of view, and also from a financial point of view, of course, because it's nice to earn money to pay the bills. But obviously the COVID pandemic has created a massive challenge for us as well. And it's just something else we try and take in our stride and move on with.
Yeah, I said this to people the other day. It's almost like, small businesses are sort of taking this on the chin, and, moving through it as best they can. Certainly certain sectors have been hit harder than others. But I think, people have maintained their positivity and have, looked to see light at the end of the tunnel, because, hopefully for most sectors that they'll survive it and there'll be business coming their way the other side, as long as they can survive this situation we're in right now. So you kindly agreed to sort of share some of your wisdom with us. So I'm going to hand over the screen to you and just basically leave it up to you to educate us. So let me just put you in solo. The floor is yours, James.
Okay, brilliant. Well, thank you, Paul. What I wanted to talk about briefly today over a few minutes was when your business should and should not borrow money. Now, clearly in the last year, with the global pandemic and the government loan schemes, there's been an awful lot of money lent to businesses who are struggling to show the viability of being able to repay it because they don't know when they're going to reopen. So I'm going to leave that slightly to one side, because borrowing money to survive, to be fair, is a legitimate reason to actually borrow money for your business. But I'm going to be slightly more traditional in my approach here and just go through when your business should borrow money and when it probably shouldn't. So the most traditional way, or two real traditional ways of actually borrowing money, reasons of borrowing money for your business. One is to buy an asset. And I would always say that's a fantastic thing to do. So if you're looking to buy an asset for your business, that may be a property where you can borrow money over 15, 20, 25 years. It may be a vehicle. It may be something agricultural. It may be a big bit of kit, bit of machinery for the business. All those things are great reasons to borrow money because they add value to the business. They allow the business to continue to grow. And they are an asset in the business, and generally they will depreciate over a period of time if it's a bit of machinery or a vehicle, or if it's a property, it may well appreciate over the period of time, as well as offering a home for a business. So a great reason to borrow money there. The other real reason to borrow money for a business is everyday working capital. Now, I don't mean you just borrow £100,000 and you don't know where it goes, which a lot of people have done during the pandemic. I mean, properly financed working capital. So you need extra funds to take on a new contract, extra staff to run a machine, or you're a business that offers credit terms of, say, 60, 90 days. So you won't get paid for a period of time, which is the nature of the business, but you still need to make your mortgage payments, your staff payments, your tax payments on a monthly basis. So that will require an element of borrowing. Now, you may borrow that from your clients by taking credit from them, or you may do it via a lender, via a credit finance facility, an overdraft facility, which is probably the most common facility, or a factoring or invoice discount facility. And that's all perfectly legitimate ways to borrow money as long as you stay within your agreed limits. The only other real ways are that I would encourage customers to borrow money are startup and acquisitions. So starting up a business, you're light on capital, you generally need money either for stock or for working capital or whatever it may be. Starting up, either injecting money yourself as a loan into the business, borrowing from friends, family, or a startup loan or grant, completely legitimate as long as it's forecasted correctly. Or an acquisition. And we see this quite a lot in the service industry, be it estate agents, IFAs, etc. The quickest and easiest way of growing is to actually purchase one of your competitors. You buy their book, you bring it on board, and the monthly loan repayments are serviced by the income that's generated there. So they're the real reasons you should borrow money for your business. When you shouldn't borrow money for your business, well, when there's no tangible benefit. So if you're borrowing, figure I mentioned earlier, £100,000 for your business, and actually the only reason is you're keeping the business going on life support, well, despite what's happened in the last 12 months, that's not a great reason to borrow money for your business, because it's likely to end up piling what we call good money on bad money. One of the first things to teach you at the bank when you're looking at lending money is don't throw good money after bad. At times in life, you have to cut off and just say, right, we're going to cut our losses and we're going to move on. And there's definitely a time when it's not to borrow money. Something I see often are businesses, especially directors, borrowing money to fund their lifestyle. So if it's been a bad year for a business and they've made, say, £10,000 profit, and they usually make £100,000 profit, but the director's still taking out £80,000 to fund his lifestyle. He's got a nice house, a nice car, likes to go to the Maldives every year. Well, that's not a reason to lend a business money. If he wants to borrow money personally to fund his own lifestyle, that's absolutely fine. But a business should not subsidize a director's lifestyle at all. It's a very bad reason to borrow money and will ultimately lead to problems. And the other real one I want to mention is borrowing too little or too late. So it's very easy to avoid borrowing money, and a lot of businesses pride themselves on not borrowing. But actually, there are legitimate reasons, as I mentioned earlier, when a business would need to borrow money to grow, to survive, to take on new contracts, whatever it may be. And you should plan for that by cash flow forecast with your accountant or a business advisor to make sure that you have the right level of funding in place at the right time for your business to grow. Think of borrowing money as a bit of a sort of life support system in a positive way, where it actually helps you to grow and survive. It's food for the business, plant food for the business, rather than something you have to take on only in the worst possible circumstances. Borrow at the right time, at the right rate, with the right product, and it will help your business thrive and grow.
Thank you very much, James. Some great advice there. I appreciate that. Thank you. So one last thing then, and then I'll let you crack on with the rest of your day. If, you're a small biz owner yourself, if you were to sort of like give one top tip for any small business owner out there, what would that top tip be?
I think at the moment, this would always have been the case, but I think especially at the moment is hold your nerve. If you are doing the right thing, if you feel that you're running your business the right way, and you're looking after your clients and you're marketing yourself properly, and yet you're going through a bit of a bad time about it, don't quit then. Hold your nerve, keep confident, keep working hard, and things will turn around. And I've seen so many people in the last 6 months say, it's all gone wrong, I'm going to quit. And I think I understand that. We all have days like that, but keep doing the right thing. Keep doing the right thing, work hard, and success will come back. And that's what I've said since starting my business. And I had to tell myself that several times. Just keep going, keep doing it, keep turning up, and success will come. So I would just say, don't quit.
Yeah, great advice. particularly in the current circumstances, but, you know, generic advice as well. So for anybody listening to this and not watching it, if they want to get in touch with James, it's James Blacklaws. I'm sure you can search him on social media, or it's jbcommercialfinance.co.uk. And it's well worth connecting with James, because like I say, he's been doing a great job keeping people up to date with bounce back loans and C-bills and what's been going on and what his views are. So yeah, well worth connecting with him. So thanks a lot, James. Your ordeal is over. Thanks for your time.
Brilliant. Thank you very much, Paul. Thanks everyone for listening.